Hi guys, welcome back. Today we're going to be discussing about RSL GareTech's Q2 FY24 results. So first thing first, let us discuss about the business model. So as you all know, RSL GareTech does very intrinsic and high precision gears, and all these gears go in. They are not into industrial gears but vehicle gears. If you talk about their product portfolio, you will see that most of the gears goes into two wheelers, right? Around 43% of the revenue comes from two wheelers, and then from passenger vehicles and tractors and ATVs, right? So I've covered the entire business model in detail in my YouTube video, which I've done earlier. And you can just go to my YouTube channel, Business Analysis Playlist, and find RSL GareTech, right? If you want to understand the business model in depth. Now, let's come back to the Q2 FY24 update, right? I'm just directly going to address the elephant in the room. Over the years, or not over the years, sorry, over the quarters, we have seen that that RSL GareTech has been growing at 25 percentage, right? Like the top line has been growing at around 25 to 30%, sometimes even greater than that. Now, there has been quite a lot of reasons for it. One of the reason was the fact that they did the capex during COVID, when nobody was ready to do. The second thing was there was a product mix change happening over there in their company, because earlier in three wheelers, three wheeler was a dying market, and they were I think from there the revenue was around 12% or 9% of the revenue was coming from there, and they reduced that portion of the revenue, and they started moving into passenger vehicles. So product mix change happened over there, and lastly and final is the fact that they had a backward integration in their factories, right, to make these gears. As a result, all of these things not only help them with the top line, but also give them margin expansion. Now, coming down, you would see over the last two quarters, we've seen that the top line has been falling, right? Like the company that was growing at 25 to 30% is growing at around 15 to 12%, right? So, and it's a huge difference, right? We're talking about from 25 to 30 to 15, like a lot. So, what are the reasons for this? Now there are three reasons for this reduction in top line that you see. One is the fact that the ZF, which is their major client, that is that there has been some operational issues. They were not able to do the delivery on time. The second thing is, when you talk about gears, there is a final process called gear grinding that goes, okay. And for this, the machine that is required to do the arrival of the machine, that has been delayed. There is an operational issue over there. And third, with Europe also, again, they also do they cater a lot of their exports in Europe. Even there has been certain terms of, I would say, headwinds. So all of these three combined has resulted in such a poor top line over the last two quarters. And one thing also, if you see last quarter, if you see, I'm talking about June to June, if you had to compare, the top line grew by 12% and 15, I think 12% only. But having said that, there was at least the PAT that you see, the PAT grew from 6 to 9 crores, right? But right now you see that the PAT is also flat this quarter. PAT is like, it is from last, how do I put this, FY22 versus FY23, that is the Q2 FY22 versus FY23. The PAT is still the same, 10 crores, absolutely flat. And on top of that, top line is also at 12%. You can see that there is a lack of operating leverage, right? Now, here is the thing. See, always look for one thing. You always have to look at the fact that, see, one thing that becomes very, very critical for an investor is that the pace of the growth of business should never come down, right? If a company is growing at 25% and आगे जाके बोल रहा है कि like 15% करेंगे, that is a big red flag for an investor, right? The second thing is the in terms of guidance also, a revision in guidance is also not a good thing, both of it which are a red flag, right? So think about this, and you can never have a business that grows in straight line, okay? Absolutely not possible, because the world is changing, the world is dynamic. You never know from where one war will start, and after that some supply chain issue will come. So this is something, there are a lot of factors that goes beyond control. So that is why you have to think like a businessman but act as an investor. So now when you act like, when you talk about act as an investor here, right, a fall, like coming back to the same point, fall in top line, when you say fall in pace of growth, right, that is where the issue comes. Like the entire, you can have a great business, you can be doing capex and everything, but the minute you see that there is a fallen growth, especially in your top line, then then it is over for the business. And that is what has been happening for RSL over the last two quarters. You will see even the stock has also not been moving, right? One of the reason is the fact that the expectation has come down from the business from 25 to 15, and also the management has been vocal about the fact that 500 crores that is there. Yes, of course, that remains the top priority to achieve it. But having said that, this year at least, in short term, that you can see that they can grow collectively by 15%. Probably that 25 and 30% is something for next year, that they can. Now see. talk about it, any business agar aap dekhte ho, I think one such business even in Q2 that we see is Link, where there is a revision in guidance, which is not a good sign. There is another business called Moltech Packaging, which has also done the same, revise the guidance. Even Moltech Technologies, for that matter, has revised the guidance. They told they'll grow by 25 to 30%, and now they told they'll grow by 15 to 20%. Just giving you that, always look out for these kind of things, revision in guidance, and the fact that how do I put this? Revision in guidance and fallen pace of growth. Now, usually what happens is people, I think one behavioral trait that I've seen in terms of retail investors is when the stock is doing well, when the business is performing well, usually, and you see that the stock is making new highs every time, people come up and they're like, oh, stock is expensive ho raha hai. They talk about valuation, they talk about XYZ things, and then they become so afraid to buy the stock. And then they see that the business makes another new high and everything, right? And they miss the whole rally, but they never bother to question ki, like, why is this business continuously making another high and another high? Because they fail to understand that the business over the year is going in the right direction, right? There has been immense scope in the business, everything is going right. Similarly, if you talk about it in RSEL also, over the last quarters, everything was going right? I mean, the capex was going well, they were always under promising and over delivering, right? Great management also to talk about it, everything was going well over there, right? And that time, that was the time to buy the businesses. And now what happens is, right, when the revision is revoked, when the guidance has been revoked, and there is a fall in top line also, what happens is and the stock falls, right? People think it is too cheap, and then they go ahead and buy the stock, but they don't understand why this business that has been growing so swiftly, why has it been falling down? Nobody bothers to question it then, right? This is where the problem is happening. That is why the business has fallen down. So having said that, see, this is no buy or sell recommendation, don't take that. I'm just trying to explain the psyche of what happens. That is it. Like, do not nothing I tell is a buy or sell recommendation, so do your own due diligence. But having said that, always do this. There is always a reason why a stock runs up. There is always a reason why the stock also comes down at the same time, at that same pace. Right now with RSL GetTech, you see, whatever the short-term ka problem that could be there, it could be any reasons, XYZ reasons, it could be anything. But having said that, there is a problem that is happening in the business in terms of operation, and we do not know when this will be all right. When you talk about the short-term problem, it could be a year from now, it could be better, or who knows, it could be better in another quarterly, maybe in the next Q3 and Q4 only, it becomes better. We do not know, right? But having said that, it is our duty as an investor. This is why I always keep telling you, track the business, right? You stick with the business when it is doing well, and you find another opportunity when that business is not doing well. This is why I keep telling constantly, track the business, track the business, track the business. And right now we are seeing with RSL GetTech is that clearly there is some short-term headwinds you can see, and the management also has clearly told you, like, now we can grow somewhere between 15 to 20% at least for this year. Probably next year, we can do that 25 to 30% and target that. And of course, right, that is okay. Absolutely fine. Now, other than that, if I have to give you other business update, is they in terms of capex, what they're doing is they have one plant in Gajrala, which is their mother plant. There, all I think that is where the majority turnover happens. Then they have the second plant, right, where it was a small plant, like hardly 50 to 50 people were working, and then they had 11,000 to 12,000 square feet area there. And now they're shifting this plant to another lease property, rented or leased property, and they're trying to expand the operations, and they've got a new line also, new line of product portfolio for this. Other than that, if you look at the entire gear car thing also, they are moving from away from gears, and also adding some new product portfolios, whether it is axle, wheel axle. And recently they won an order for this e-bike. When I talk about e-bike, it is this e-cycles, for that, to make a gearbox for that. And that is why they're shifting that entire plant to that rented lease plan that I was talking about in Noida. So all of these developments are happening in the business. Not only that, I think they started this very small paint thing also. I think the investment is around 1.5 crores. Now, it is not a huge part of their business. It is hardly a small part only. They're doing it only for their own customers. Like, let's say if a customer comes, already they're buying some one product for them, and they're telling, like, can you please paint this and give that. That is where they're doing this product line. But other than that, nothing else. But see, bottom line is the same. You can do the capex, you can do all the capex, you can add more product portfolios and everything. But ultimately, market is looking for that, you going back to the 25 to 30% growth rate. And unless and until that happens, it becomes that that growth rate comes back, it becomes hard for this business also to grow, right? So this is what was the main thing, or the main highlight to look out for in the entire con call, is to see if the guidance had been revised, and that is what the management has done. Going forward, let us continue to track the business and see how long this problem will persist, and hopefully RCL can get back on its track and go back to its glory days of growing at 25 to 30%, right? So that's it about the business, and yeah, I hope to see you again tomorrow. Take care. Bye.